Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, listening to us. We're on Saturday and Sunday and a couple times during the week on a number of different radio stations from Albuquerque up to Albuquerque, New Mexico, all the way up to Las Vegas. We're in the Inland Empire in Southern California, as well as up in the Lake Tahoe area. And these fine people who bring the show to you each and every week, they're all unsung. I can't say that very well, but I do appreciate what they do and how they bring this particular news show to you. We have some opinion, but we try to bring you some solutions to lending problems. And there are plenty of lending problems, especially with COVID. Most people know that if you're in a purchase right now, you have to wait in line. I mean, it's slow out there. And the reason it's slow is because we have so many more transactions that we're doing this year than we did last year. If you look at the volume, dollar volume from now, which is about $3.2 trillion, to last year, which was about $1.5 trillion. So we've more than doubled the loan volume dollar-wise, and that would also be transactionally. Now, if you don't really understand, most consumers, most people who get a loan don't really realize that the hassle and the amount of paperwork that you're going through is doubled by the loan officer, the loan company, the mortgage lender, or the lender before they're able to package that loan and sell it to somebody else so they can replenish the pool of money that they're allowed to then again lend out to you. So it is a mountain of paperwork. I know this for a fact. I had just gone through several months worth of documentation on correspondent or lender loans. Malibu Funding, the company I work for, is a lender. And the amount of paperwork in those files just to get files purchased off the warehouse line and trailing docs and just a number of different things is huge. So if you're a consumer, you're a borrower saying, why do I have so many darn forms to fill out? I hear you and understand that most lenders out there are doing about twice that paperwork in order to make sure that those loans are purchased and sold to the secondary market. So we're also on YouTube. We're also on Jeff Barton, the Mortgage Voice. That's the name of the show there. That's my channel. And if you go to any of the podcasts, Big 8 podcasts, Daryl, do you have a list of those Big 8 podcasts for us?
I certainly do, Jeff. It's
Great.
Apple Podcast, Google Music Play, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, and you mentioned YouTube already. Okay,
excellent. Yeah, and the message we get out is always educational. Try to bring programs and solutions. We have another 3 great guests. This show, we also do about a 2 or 3 minute version each and every day on LinkedIn and YouTube, as well as Facebook, Instagram, and Twitter to get all this information together, to put it on each and every day. Again, it's work. I enjoy doing it. I enjoy bringing to you information that you probably don't have. But if you want to look at it for yourself, there's a great website that I go to all the time for information. It's called Mortgage News Daily. And those fine people over there, a couple of them have been on the show before. And Matt, who is, I think he's the chief operating officer over there, also writing articles for the website. They talk about the Federal Open Market Committee meeting, which just happened on Wednesday. It's funny, this year we had an election on Tuesday and the FOMC on Wednesday. Now, a lot of what happened with the Federal Open Market Committee meeting, as a lot of what's happened with COVID and such had disappeared because the election news was so overwhelming and all-consuming and is still, in flux. We still don't know. I think the financial markets have calmed down considerably. What we had seen for mortgage-backed securities, which were selling almost at one point. Now, what does that mean? It means the yield, when you purchase them, they were going to give you 1%. Now the yield is back down to 0.72%, which means that rates got better, right? Let's go over the rates quickly for you. Let me just pull that up for a second. Okay, so the 30-year fixed rate today is 2.88%. The 15-year fixed is 2.38. The FHA is at 2.38. The jumbo is at 2.41, and the 5/1 ARM is at 2.71. These rates, we had seen rates jump from Wednesday to Thursday, and now they've calmed back down. Financial markets really take comfort in consistency in what is happening with the election. Is obviously an upheaval, but they see that either the current president wins or the other guy wins, that really monetary policy, the way we're going to attack the coronavirus, how we're going to try to rebuild the economy, that's not going to change all that much. And one of the things that I liked about this election was that that was not an issue. There was no issue over, whether we were going to get a stimulus bill. It was how much and when. Well, we saw today that some of the politicians after the election have realized that this is the most important thing out there for most Americans, especially those 3.5 million people who still have forbearance for their mortgages. Rent forbearance is also in the same boat. These people who, through no fault of their own, lost their job, and now they're trying to figure out exactly how they're going to pay their bills. We hope we get an extension in January for another 6 months, and that's probably how we're going to go. We will see a tremendous uptick in economic activity in the fourth quarter this year through the second quarter next year, meaning that the bounce back, it's not much of a bounce if it takes 1.5 years, but the increased activity in the economy in the sectors that were hard hit may take a little bit longer. The restaurants, the ball game that you want to go to, any mass gathering event. But if you're, in general looking at online purchases and you're like trying to conduct business, even in the mortgage industry and in the lending industry, you're going to see a lot more activity. We're going to see rates remain low, probably through 2022. That's according to what the Fed says. And they had their open market committee meeting, as I was saying. And so let's just get a couple of notes that I thought were pretty interesting as to what they were saying. They said that the coronavirus will continue to affect short and midterm economic viability. Okay, we all know what that means. It means that, hey, until we get a vaccine, we're not going to be back to full strength, right? And that may take another year to get everybody on board with the vaccine, or at least enough people so that we have some kind of immunity. They also said that full employment and inflation of 2% is the goal. Now, what does that mean? That means that in order to get full employment in certain sectors, we're going to probably have to overpay for workers, and that is, of course, part of the inflation rate at 2%. And we've said here before on the show, if inflation goes to 2.5%, 3%, it's an average over the long term, and long term to me is 6 months to a year. So if we get inflation in the range of 2 to 3%, 3 to 4% even, as long as it averages out to 2% within 6 months to a year, that's the Federal Open Market Committee meeting chaired by Chairman Powell. That's what they're looking at, and that's what I think is accommodative, which is the stance that they've taken, the accommodative monetary policy. That's what they're looking at, and that's something that I think that the lending world, the financial world, is actually pretty happy with. And that's why I'm saying it didn't matter and doesn't matter who's really leading the charge. As long as these particular cornerstones stay in place and the Fed is pretty on top of what's going on with the recovery, especially what they need to do in order to keep the economy strong and growing, we should be okay. And I think that for me is calming. It means that, okay, so a couple who's got a couple of good jobs and they want to go buy a house, it's good. The problem in most markets, and we'll talk to a couple of our guests who are in the real estate business as well, inventory. What's happening with inventory? How are we going to address inventory? And what can we do about increasing inventory? All of that means that you're going to be paying higher prices currently for real estate. Although you're going to be paying less in the mortgage, there's a bit of an offset, except when it comes to a couple of markets. We're going to talk to manager Charles Giscombe over in Las Vegas, Nevada. One of the areas we're seeing possibly next year we could see a drop in some prices in that the tourist industry is really hurting there. And so as a result of that, the economy is kind of hurting too. And as a result of that, we might see some lower prices. Anyway, I'm Jeff Barton, your voice in the mortgage industry. Really appreciate you listening, and we'll be right back.
Right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to the Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in each and every week to the show. We're on Fridays, Saturdays, Sundays, some places even Thursdays. We're from Albuquerque to Las Vegas, from Southern California up to Lake Tahoe. And you can see the show as well. We shoot it for video for some of the radio stations. But if you go to YouTube, Jeff Barton, the Mortgage Voice, you can see the show, you can hear it, you can save segments. We're also on the Big 8 podcasts. And I get a lot of people who say, where's your podcast? And I go, no, we're also on the radio. So there's a lot of ways to see and hear what we're doing. And what we try to do is bring information to you in a friendly, easy way to listen to it. There's a lot of technical in lending, but suffice it to say is it's usually about your rate and about what's your employment status. At least that's what it is today. I brought to the show someone who's been on the show several times, but not lately. And I'm really grateful that she has consented to come on again. It's Olivier Becerra, who is from Malibu Funding, does a lot of business all over Southern California. Olivier, how are you?
Good. How are you, Jeff?
You know, as I said off air, I'm a little bit tired, and I think it's because we've been so busy for the last 9 months. Nobody's had a chance to catch their breath, and maybe you're feeling it too. I'm not sure.
Oh, gosh, yes. I've been doing this for 20 years, and this is definitely the busiest I've ever seen it. Actually, I've been busy for more than 9 months. It seems like I'm going on 2 years right now, and definitely feeling it.
You know, it's good that you said that. I was, again, talking to a loan officer, explaining to them that, and because they were trying to get political on me, and I said, the lending business has really been good since the middle of 2010 for me. So this is like a 10-year run that has seemed to have little bits of peaks and valleys, but not that many.
No, it's actually been pretty steady, actually. If they even creeped up into the fours, people start saying, oh my gosh, they're horrible now. No, that's before people would die for a 4% something, 4 point something, but they are amazing still.
Yeah, I think that's true. Well, what have you seen in terms of product? Do you see that there's more product available, maybe some non-QM coming back that you weren't expecting, or some other conventional type product, VOE program, anything that might, show that
actually, there's a really good one. Yes, all the non-QMs went away for a while there, and then they've creeped back, and they're getting more aggressive as of late, even especially one where normally those are reserved for investment properties. Now we have some that are for owner-occupied. So on your house, if you're self-employed and, you have too many write-offs, you can pretty much, show nothing and get a decent rate. I mean, it won't be like a hard money rate where they are like crazy in the 11s or 12% range.
Right.
But, somewhere around in the 4s, which is still a great rate, 4.5 for a stated owner-occupied. You still have to have your minimum credit scores and whatnot, but you haven't seen that one in years. So that's actually nice to have back, because a lot of people who have good credit just can't show the income.
Right. No, I think that's. So what is the credit requirement for that? 700, 680?
Usually it's about 680 to 700. I think it even goes down to 660 in some cases, but it just at 660 you get less availability of cash out or the loan to the value. So
you have to
great programs out there.
Yeah, I think they're
programs. The rates are getting better. They're just getting more aggressive. I think as we might see a little bit of the regular loans, maybe the whole world is already refied already. You might start seeing a little bit of a breather. Only reason I say that is because some of the lenders' turn times are getting a little better. So instead of waiting a whole month for a refinance now. I just got notice that we only have to wait 3 days. So there was something happening there.
Well, it's interesting.
After that, we'll have another roll, refi
Right.
roll or waive for those non-QM loans. So we'll see.
Well, interesting. You mentioned two things. One, maybe it's slowed down because there's not that many people. I just read that there's 18.5 million people at these current rates who could still refi and benefit from the savings, average savings of about $300. So there's plenty of people out there. I guess they're waiting, or whatever. And then the other one was the turn times at all of the lenders. Yeah, they have improved a little bit. Maybe they're hiring more, or maybe they've streamlined some of their processes more efficiently.
Yeah,
I'm not sure.
That too. They could be hiring more. I even heard that they were hiring more at one of them, though I haven't seen their turn times get any better yet. But
right.
We'll see. You know what? It's a good thing for everybody. It boosts the economy. Everything. Everything rotates around our industry, so
right.
Our industry usually if something happens, it's the first to go down, but it's also, when it's up, we support everybody else. It's a good thing
right.
that they are refinancing. It's a good thing. People are still buying houses too. So
no, I think that's true.
It's going to be changing that much real soon.
I think when the economy is bad, they lower the rates and the mortgage industry is better. And as you said, it really carries the economy, and the housing sector has really carried the economy through the pandemic. There's no question about it.
Yes, absolutely.
Now, you mentioned a little bit about real estate. What are you seeing out there in terms of availability? I know inventory is really low, and I know that the bidding wars are unbelievable. What are you seeing, and what are you telling clients who are looking to purchase when obviously they need a loan? What are you telling them they need to do in order to get the best possible chance of getting that property from a loan perspective?
Well, what I tell them that they have to, it's a numbers game,
Right.
You either go high, and expect that when the appraisal comes in, that you'll be able to, if the appraisal comes in lower, then the sellers have to come down on the purchase price.
Right.
And you might be, $5,000 above somebody else. It's still the same thing, 20% down, same credit, range, but because you offered a little bit more, you'll get it. And it doesn't
Right.
matter if the appraisal comes in lower, you already got it. They have to come down on the appraisal. But
or they can make their own decision whether they want to pay for it.
A lot of, and I can tell you because I just see so much. There's 10 offers on every house right now.
Right.
You just have to be the stronger offer. You have to have, and it's not always the case, because I do have a lot of down payment assistance loans, which don't seem to be they want the people they're going to close fast, big down payment, high credit scores.
Yeah.
And,
right.
I'm sorry, go ahead.
No, I just said, right. I agree with you. I mean, if you're a seller, that's exactly what you want. You want somebody who's, not a down payment assistance program person. You want somebody who's obviously got a large down payment, great credit score, and, will overpay for it. That's what you want.
Exactly.
But what do you think is
down payment assistance? A little bit of it's a little hard to get them accepted, but
right.
They're out there. They are out there. I had a couple of them just recently in the past couple months with those that were able to get into a house. They are taking a little longer to close, though. Those take about 60 days, so that's why the sellers
right.
aren't too happy to take them.
Yeah, I agree, and I think in our market in Southern California, and for everybody who's listening to the show who are in other markets, you may be able to relate to this too. In Southern California, what we deal with is a certain, classification of borrower. And what that means is that we may find a certain borrower who's an FHA borrower, or a certain borrower who's an all-cash borrower, but they tend to congregate in similar areas. Have you seen any kind of indication that we might break out of that in terms of how we're, lending money, that we may see an integration of all kinds of borrowers in all kinds of areas? because what happens in an area like I live in, for instance, over in Malibu, is that, they're all super jumbo. There is no, differentiation in housing. It's either loan or it's not. Oh, I see we're up against the time frame here. Lavere, shout out your phone number if you would, please. That'd be great.
Oh, sure. It's 626 area code 712-9920.
Okay, thank you. And I didn't even get a chance to have you answer that. If you could quickly just give me a quick answer on it.
I don't see that changing. I think that, if you're in a rural area, you're at a rural loan. If you're in Malibu, that is always going to be a super jumbo. And,
yep.
I think that's just the way things are, unless there's some big subdivision being built,
right.
Like down my street, they built condos, $800,000 condos. And I was like, wow, well, that is so crazy because most of the houses here, I love my house, but it's not a huge house.
Right.
It's probably worth about $7, and you got these condos that are worth more than my house. So I don't know that will change. I mean, it's not that huge of a difference, but I don't think I answered that question for you. But no, I don't.
No, you did. You said it's going to be the way it is. Anyway, we're up against it. Lavere, thank you very much for coming on the show once again.
Okay, well, thank you for having me. Appreciate it.
Sure, absolutely. It's Lavere Becerra from Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks a lot for listening to the show. Thanks for tuning in. We're on a number of different radio stations in a number of different cities all across the U.S. and appreciate you listening. We provide answers. If you want to see the show, you can go to YouTube, Jeff Barton. The Mortgage Voice, if you want to see us on a daily, you can go either to LinkedIn or Facebook or Twitter or what's the other one? Instagram, right? That's the other one I'm on. It's hard to keep on top of all this stuff because when you are heavily invested in an industry and then you have to change what you're doing in order to inform people through certain types of media, that's where people my age do not have the seamless transition from one to another. A lot of people do. My next guest does. He's terrific. Charles Giscombe from Malibu Funding. He's the responsible or qualified individual out in Las Vegas, Nevada. Charles, how are you?
Outstanding, Jeff. Thank you for having me. Thank you.
And thank you very much. We were talking off air about a loan you're offering, 15-year at 1.75. Tell us a little about that.
Yeah, interesting situation. During the pandemic, the COVID has not only taken a lot of people away from us in this country, and obviously it has put fear in individuals, and it's wreaked havoc all across the country and across the world. It also has taken effect in the mortgage industry. And the reality of it is a lot of the mortgage industry was at a standstill. Many programs, many loans went away, Jeff. A lot of turn times that we call it, which means just for the average listener or individual, the layman, is the amount of time it takes to process and underwrite a file. Some of them were taken from 3 days to 3 weeks to 3 months. It really was just, it kind of just stalled everything out. So what Jeff is referring to is I have a client who is a really good client, very good profile, makes a lot of money, great credit score, just really consistent and solid. And luckily for him and his family, the pandemic didn't affect their employment or their income, so they were still able to transact. But in the midst of that, they submitted their file for a loan just to do a simple refinance because the interest rates, based upon what was happening in COVID, the interest rate lowered, and they were trying to rate in term, meaning to change their interest rate to a lower interest rate and to change the amount of time on their loan to a lower amount of time. For example, from a 30-year to a 20-year. Okay. In that, the individuals were not able to. They weren't able to get the turnaround times necessary because the lender was having very much difficulty. And so a loan that should normally take us 30 days based upon the bank that we were utilizing stretched to 60 days, to 90 days, to 120 days, and so on, all the way up to 6 months. For that, the client had to leave, and we at Malibu Funding understand that if you're waiting for something and you have an expectation that you are allowed to go wherever you'd like to go if the time frame is not being met. Well, one thing that's happened is at Malibu, we work with a lot of people, generations of people. Jeff and I have worked with grandparents, parents, grandkids, kids, all the way down. So at the end of the day, when you provide a good service and you create that base, then you have a retention of your particular clients and their offspring and everyone else in friends and family. Well, for that situation, the client left us, and the wife told the husband that Malibu Funding, Charles Giscombe, Jeff Barton, as a collective, did a loan for us that we weren't able to get done anywhere else. And so for that and their loyalty for us, I don't want to leave. We want to go back and give them that loan again. It was a very, very humbling, a very appreciative, me and Jeff like to say that every once in a while, it's okay that you need an attaboy. And attaboy is simply saying, thank you guys for providing the service and being, your intent being well and providing good service and just being loyal. And for that, the gentleman brought the loan back to us because him and his wife had a conversation, and she directed him that we would not be in this house had it not been for Malibu Funding, Jeff Barton, Charles Giscombe. So the loan came back, and in return for it coming back, we lowered them a whole percentage point, took them down from a 20-year loan to a 15-year loan, and gave them an astronomically low 1.75% 15-year interest rate, which is an amazing rate, especially during COVID and especially during the election time. So I'm very grateful, and I'm happy, and I know I'm long-winded, I'm very happy that we can provide that kind of service for our clients at Malibu Funding. Jeff has created an environment that allows us to be flexible, allows us to care, spend more time with our clients, and for that, this is the outcome of those things.
Thanks, Chuck. I appreciate that. But the longer version of that story that I understand is, loyalty is great, but service is better. So what I understand is getting someone into a house they couldn't get into, somebody else couldn't get them into that same house with that same loan. You did it. You got it done, and they provided you with another chance to get them the refi. And you got them the best refi. It was better than the one that they waited 6 months for. So it's going to work out well for them, and that's the main thing for all of our concerns, right? We want to make sure the customer, the client, the people that we're doing business with and for are the ones that benefit the most.
That's exactly what it is. Like I said, the environment at Malibu Funding is one of the reasons why I love this company and Jeff so much, is because that is what we do. Our intent is always best for the client, the best we can do. We won't always be the lowest rate. We won't always be the fastest turn time, but what we can provide is a service that will go above and beyond the call of duty to try to educate our clients and get the mortgage or service done for them. And even if we can't get it done, to have enough good intent to send them where they need to go to make sure they can get the loan done right, because at the end of the day, that's what matters the most.
Absolutely. Let me ask you a little bit about what's going on across the country, because I think you not only are a responsible individual, qualified employee down there in Las Vegas, and we appreciate that, but you also have business in a number of other states, East Coast, West Coast, up and down, north and south. What do you see out there in terms of the lending products themselves? Are they expanding? Are they shrinking? Are we going to have more opportunities to do better lending? Or what's going on, especially with the election seemingly winding down at this point?
Well, it's very interesting. Malibu as a whole, as me and Jeff talk about, are getting a lot more business. We're getting much more business than we were. And that's possibly and probably because we're able to do things that other individuals can't do. We have the flexibility to broker loans as well as to bank loans, as well as to provide other products, niche products, to help service a need when we can't get a traditional loan done. So the business has been increasing for myself and for Malibu as a whole. Mm-hmm. Well, I do recognize that during the pandemic, what happened was a lot of the loan programs, because the uncertainty went away. Especially from a non-QM standpoint. And even from a traditional standpoint, meaning Fannie Mae, FHA, government loans, USDA, VA, even from that standpoint, a lot of a lot of programs kind of hedge their bet a little bit. They basically said we're going to lower the credit, we're going to raise the credit score requirement,
right.
We're going to raise the employment requirement, we're going to make it a little bit more strict so that we can make sure and assure ourselves that we won't lose. So what happens is the other programs that are beneficial to individuals who are not so perfect credit clients or profile clients made it difficult for them to get in. But what happens now is when they got some certainty and started seeing the market come back and seeing
right.
Wall Street come back, the stock market started coming up. Basically what's happening is they felt comfortable enough, so a lot of those lenders are back in the game and they're back to their original programs. And I'm even seeing some additional programs that I didn't see before that are allowing us to get some clients in. As a matter of fact, Jeff has introduced us to some new resources and banking resources that provide some programs that we never really had over the last couple of years, which is a great thing to see. So that's why our business can keep thriving, and we can still provide, and we can also provide some additional things that we weren't able to provide in the past.
Hey, Chuck, could you shout out your phone number? People are going to have questions and maybe want to talk to a terrific loan officer, somebody with a lot of experience that you're demonstrating now. Let them know how they can get in touch with you.
Absolutely. You can reach me at 702-328-5191. That's 702-328-5191. Obviously, it's Las Vegas number, 702. Or you can email me, charles@malibufunding.biz. That's charles@malibufunding.biz. B-I-Z, boy, Isaac, zebra.
Chuck, thanks very much for coming on the show, teaching us a little bit about what's going on in your world, especially with lending. And, obviously that's a terrific story about the client coming back. That's great. Thanks a lot.
Thank you so much for having me, Jeff.
Okay, very good. I'm Jeff Barton, your voice for the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in each and every week. We're on a number of different radio stations all over the country, and I really appreciate those people who respond to what we're doing. We're educating, we're talking about loans, we're trying to figure out what the best loan situation for you is. We're on YouTube, Jeff Barton, the Mortgage Voice. You can see that each and every day. We're on LinkedIn, and we're on Facebook and Twitter and Instagram and a bunch of other things. If you go to any of these things on a daily basis, we do about 1 or 2 minutes. Again, same information, shorter version. And if you want to read about it, go to Mortgage News Daily. They're great website. I get a lot of information about what's happening in the mortgage community and in the mortgage market from that source. We're also on the Big 8 podcasts. And again, Jeff Barton at YouTube, Jeff Barton, the Mortgage Voice. You can see us there each and every day. Bringing to the show a person that we haven't had on the show for quite some time, and really I'm excited to have her back because she'll give us some insight about what's happening out in the Las Vegas market. Is Rebecca Fitzgerald. Rebecca, how are you?
I'm doing great, Jeff. How are you?
I'm good, thank you very much. And the other thing too is real estate out there. What's happening because tourism is down? Is it still multiple offers on properties, or what's happening?
I mean, that would really depend on the price point you're talking about. Single-family homes, and under $500,000 haven't skipped a beat. There is strong competition with that market, just like any other year. I have noticed condos are not easily selling, and larger multi-million-dollar properties aren't selling as quickly as well.
Okay, and is that due to the fact that it's the employment issue out there, or is it they just overbuilt the condos? What is the issue for that? Do you know?
The issue for the condos not selling? No, I actually don't think it's either one of those. I honestly think it has to do with the fact that people don't want to live in condos; they want to live in houses.
Right.
So, and also if you're looking at an investment or like whatever it is, you'd want to probably be able to rent that out if you didn't want to live there anymore. So you'd want to look at those types of things and what would rent faster. And the condos probably aren't as desirable because you're living in, in units with multiple other people going in elevators, and, it just kind of freaks people out because most of our like high-end condos, aren't cheap. So these are people that obviously probably are older and typically do have more money when you get older. So like that dynamic, people just don't want to live in there, so they'd rather just buy a house. That's why there's still competition in the single-family residence, as long as you don't like go over a certain price point, because those just go slowly in general.
Right. Tell me about, you were talking just about, people wanting to be in a single-family home. Is it because of COVID, you think, mostly, or the virus, or is it just because of the rental or the resale value?
It's probably a combination of both. It's not necessarily COVID that really is the reason. It is, the catalyst, right? Like that should probably have already happened. Why our society was moving a little too slowly, if you really like look at it. Like why were people not being able to work from home like, years ago if they didn't need to go into an office? So a lot of people are looking at things like that this is going to permanently change their lives. So they need a room for an office. They need they need all this extra space, and then that's what somebody else that wants to rent is going to be looking at as well.
I see. Well, that makes a lot of sense. Absolutely. Unless, if you're a couple or you've got a family, you need a lot more space, and having even an ability to go into your garage as an office or use some other space in the backyard. In a condo, you just can't do that.
Right. Just really as a young person, and, a lot of young people have dogs, and within 2 years of buying a dog, people typically buy houses. So, and like everybody right now has a dog. It's very trendy, and this Chewy company has skyrocketed in the stock market. So it's just like the concept of young millennials wanting these dogs, and then they're also like, okay, well, we're going to be stuck in our houses. Most of them expected to spend their entire life savings on traveling. So since those, things have changed, they've re-examined their lifestyles as well.
Yeah, I think, that's all true. Things I hadn't really thought about. Obviously, if somebody is looking to travel, they're not going to travel that much right now. So you kind of need more space at home. Therefore, the single-family housing market, 500,000 and below, is going to be pretty hot.
Exactly.
Tell me,
and I just bought a flip, and my guideline in my head when I buy flips is to make sure the after repair value stays under the FHA max, because that, which is up to 345 out here, and I'm very confident as long as I hit that price point, the house will immediately sell because there is demand.
Now, interesting you say that. So you're looking for a borrower or a buyer who can get an FHA loan because they're looking for obviously low down payment. That is the market that you're in. So in order to make that work, what do you have to buy a property at?
It just depends on how much cash you have versus what you're using hard money and how much you're paying for escrow fees. And if you're an agent, that's not a really easy answer for to answer over the air.
Well, no, I guess what I'm asking is what kind of spread or what kind of margin do you need in order to make it work for you, as opposed to somebody else might be willing to take.
So I would probably look for 30% under after repair value.
Okay, so that
how much work that the property needs. But since I'm a real estate agent, I add 3% of savings into every single deal when I do a project. So I, just someone selling their house has to pay that extra 3%. And I also don't pay as much in other transaction fees, so I can save quite a bit just making money that way. It's creating value in your own deal, right?
Right, and out there in Vegas, we've had this flip market going on for a while. Is it still as strong as it was, or is it harder to find deals?
No, it's never going to go away. If you think about it, how often do houses need to get, repaired? And flippers create the most value in real estate because most people don't have $25,000 lying around to repair their house, but most people do want that finished product. So they're really necessary, and they do deserve the money that they make because they do all the work. You get a finished product on the other line ready to be financed.
And as you said, most people would like that as opposed to saving that and trying to do it on their own as they're living there. That's a nightmare, by the way.
On their own. They don't have the time and they don't have the experience. Well, you're a fool to do things like that. It's just going to cost you you more headache than it's worth when you could hire somebody that's already done it and just pay the mortgage, because really, that's the easy part. You know, like, you want a finished product. So every 10 years, houses start to fall apart. No matter, and the styles change as well. So even a house that's 10 years old is ready to be flipped. You can, you know, create value in that project as well. You know, the styles change of what people want, what's in demand constantly.
Interesting. In your own flipping experience, what are you seeing the trends are in terms of finishes? What kind of counters? What kind of paint color? Is it carpet versus wood? What are you seeing?
That really is up to whoever's doing the project. You know, I like lighter colors, like white in the kitchen, gray, like light floors, like similar to the same thing. I mean, you don't have to be a genius. You can just go to IKEA and kind of copy some stuff. IKEA really has the most recent trends because they kind of like sort of set the standard, companies like that, because they are accessible to everybody and they do make a decent product for, you know, what it is. So you can really just kind of look online to kind of keep up with the trends. It's really not something you have to really be that experienced to do.
Okay, and when you get into this type of business, just because we seem to be focused on this a little, what kind of, as you said, experience do you need to get into this business? Is it something that you just jump into, or is it something that you better, you know, be mentored by somebody first?
You know, you could be mentored by somebody if you have absolutely no experience in any of it. So, for instance, I know real estate very well. Like, do I know contracting? No. So then at that point, I need a contractor or somebody who's willing to mentor me on that side, and which I'll always need. But if you have, like, contracting experience and you need help on the real estate side, it's a lot of different, you know, ways you could start the same job. You just would need help in different areas. And then you would have to understand also how you find properties. So that's actually one of the hardest parts, which, you know, I work with and have a marketing company to find properties. So it's where we're able to locate properties. That's really the hard part, is finding the deals.
Right. Rebecca, could you shout out your phone number for somebody who's looking for this type of information? Great real estate agent out in Las Vegas area.
Yeah, 512-923-3489 is my cell phone number.
Okay, and we're on AM 1400 in Las Vegas, so if you're out there and you're listening right now, you can catch this interview with Rebecca at that time. Again, that's AM 1400. This is Rebecca Fitzgerald. Hey, who do you work for? What is the company you work for?
I have my own company. However, I have my real estate license with Keller Williams right now.
I see. Excellent. Well, thanks very much for coming on the show.
I have my own company for my flipping, and my marketing company are different.
Well, you've got a lot of information for people. I hope you get a lot of calls on this. Thanks for coming on the show once again.
Yeah, thanks, Jeff.
Thanks. And that's Rebecca Fitzgerald again. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in, and thanks very much for listening each and every week. We're on YouTube. We're on the Major 8 podcasts. They call them the Big 8. We're also on 5 radio stations in 3 different states, from Albuquerque to Las Vegas and the Inland Empire in Southern California up to what's going on in Tahoe. And all of these great markets bring to us members of Malibu Funding, the company that sponsors the show, and their particular, agents that work in all of these different areas. Malibu Funding has just expanded, just give us a little plug, to Minnesota as well as Idaho. So that brings the state total to about 13, and trying to expand this particular radio show to all those areas. Why do we do that? Because the public service of our public trust in a lot of these areas means that we have to bring solutions and not opinion to the lending needs. And what you have out there are a lot of lending needs not currently serviced because of the pandemic. And so as a result, non-QM lending is not as back as strong as it was. If you have some hit to your credit, if you have some issue with bank statements, or you're not a W-2 employee, you're going to have a higher rate. And why is that? Because risk is assessed via those vehicles. If you have a 710 FICO score and you are 10 years in a job and you have 20% down on a purchase, you're probably going to get the best rate, right? Conventional rate. However, if you're outside that, let's say you want to borrow over $750,000. Let's say that you only have a bank statement from your business. Let's say that you're credit challenged with a 560 credit score. All of these things are going to charge you more money, whatever the bank is. But for this segment, I wanted to talk about some different lenders out there, not just us and not just some of the guests that we bring on the show, but some of the different lenders that are out there offering different products. And I'm going to go through this a little bit monotonously, but if you listen through the segment, you'll hear that there are some lenders out there who are doing some things that may fit what exactly you need. So let's get right to it, okay? There's a lender out there called Accelerate Capital, okay? Accelerate Capital, EXCELERATE. They do a lot of real friendly type loans. They do offset loans. They do low credit score. They do DSCR loans, and those are the loans, as you may know, that if you're buying a rental property, that they're only going to look at what the rental income is in order to qualify you for that loan. They're not caring about your income. They're caring about the income of the building. Now that's pretty good. And they say the rates are as low as 5.5%. So that's pretty good too, because that's like a commercial loan, right? Okay, let's go to the next one. Green box loans, very similar. They do a lot of, let's see, full doc, 12 to 24 month bank statements, asset depreciation, and of course, what I just said, the DSCR loans. Now, green box loans has been around a while. Accelerate has been around a while. Both of these companies, Malibu Funding brokers with, but we don't lend our own money with them. So if you need those type of, not standard products, those are pretty good companies, and I know both of the people over there at both of them. I know the account executives at both of those companies. Foreign national loans. All right, these are the type of loans that we do a lot of in Florida. We have a lot of Brazilian clients in Florida. And by the way, what the election has pointed out is that there is no homogeneous group anymore. What there are, as we all know, is different groups in different parts of the country that want something differently. And so if you're going to market to different parts of the country, you need to have different products available. In Florida, in Miami, there are a lot of Brazilians who come to the United States and buy second homes. This is the perfect loan for this kind of borrower. A foreign national means that you have to have certain documentation and banking in your home country, but you don't have to be a citizen here, and you don't have to have a social security number or a TIN number. And all of these loans are pretty interesting. This is ubiquity equity. And if you fit into this basket, or you're from a different place, let's say you're from Mexico and want to buy here in the States, but don't want to move here, like a second home or some kind of investment property, these are the people to talk to. A company called, as I said, Ubiquity Funding. These are great names, aren't they? Okay, there's another company out there. Let's not use that one quite yet. Okay, a company called LoanWise. LoanWise is a jumbo type company. Now, jumbo product, what is that? Okay, so within the conforming limits, which is set per county, meaning that each county is going to have different conforming limits based on their median home price over a certain period, and that's averaged in, and every year HUD comes out with what they call conforming limits. Now, those conforming limits, those loans are conventional type loans, meaning that they're sold to Fannie Mae and Freddie Mac. That's a conventional loan, but they match certain parameters and certain guidelines via this, as I say, conventional. And so anything beyond that, dollar-wise, is a jumbo. And there are extended jumbo loans that are sold to Fannie Mae and Freddie Mac, but these type of jumbo loans are over $750,000 up to $10 million from LoanWise, LoanWise. Now that type of loan is for somebody who is, obviously well-heeled, probably owns their own business, right? Do a lot of business bank statements, but maybe writing off a lot of losses on their business. So the actual bottom line of the business may not look great, but the deposits running through the company look fantastic. Well, those are the type of loans that can be done by a company like this, Super Jumbo. They're looking at ways by which they can be able to fund a loan up to $10 million, buy a house in a certain area. We're talking Vegas today, so Southern Highlands, you want to go there and buy a huge house and want to spend $3 million, this is a company that might be able to accommodate you. It may be a little bit more expensive, but they will take different kinds of income in order to satisfy the income portion of that particular need for that company. So let's get into a different aspect of the company, of lending, commercial lending. Now, there are a number of companies out there who do commercial lending, but for small investors, somebody wants to buy a 3 to 5 unit building, somebody that wants to buy and flip a home, like the buy and flip market. There's plenty of that. And again, we're talking Vegas today, right? There's plenty of that in Vegas. And by the way, there's plenty of that in Albuquerque. And for our friends in Albuquerque who listen each and every week, all of this applies to you down there. The numbers are a little bit different, but the same fix and flip for $150,000 to $200,000 there, which is up in Vegas, $250,000 to $275,000. Yes, these same programs work there as well. Athos Capital, who just came back into the marketplace probably 60 days ago, they do all kinds of they do VOE programs, they do 12-month bank statements, asset depreciation programs, profit and loss statement only to prove income, and they do 1099 only programs. They're a pretty good outfit, been around a long time. Gal over there, Patty Kennedy, I've worked with for a number of years, and you can certainly call her. But Athos Capital, and a lot of these are on Scotsman's Guide. I don't know if anybody is aware of what that magazine is, but it's an industry magazine that talks about different lenders, different programs, what they offer. But scotsmansguide.com, you can go there and see a lot of these same companies, or find a niche company that you need in order to satisfy what you need for your particular lending needs. Multifamily stuff. This is called Lima One, Lima 1. Lima One, let's see, they do 24-month terms. So this is a short term. Let's say you're looking to get into something quick, or you're looking to rehab a property and you want to get out. So short-term loans, a year to 2 years, that's what this company does. And by the way, there are a lot of companies who are in this space that want to be able to just get their money in, get their money out. But they have a pretty good track record of funding loans quickly. And that's what the important thing is for a business like this. Lima One. Let's see, a couple more. Secured capital lending is another one that is very much hard money. Their rates start about 7.5%. Commercial construction financing through Pacific Premier. That's construction financing. Pacific Capital, same thing. Office and construction. All of these type of loans that you don't see often. Well, there it is. I've given you probably 15 to 20 different lenders on this particular segment. If you do nothing else, save it or go to YouTube and watch it, and you can get some answers to your lending needs. Anyway, I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for watching each and every week and listening to the show, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.